In this video, we are going to be analysing MULN, ticker MULN. If you want your own stock analysed, throw that in the comments, we'll get around to it when we can. Now, to get straight into it, to really no one's surprise, we are pushing down further. We're down another 10% on the day, coming very close to that $1 level. And that is definitely something I'll be paying attention to, but we will go to more detail in that in a sec. Now, one thing I do want to note, again, we did go through this when we went more through a fundamental analysis of them, but the earnings per share, again, this is their diluted one, which you do need to account for. If they're diluting the shares, that is important. And we can see that earnings per share has been decreasing from 2019 to 2022. And their shares, they didn't dilute between 2019 and 2021, but in 2022, there was a massive dilution of shares. So again, these are always the key things to note. Neither of these are going to be good for the shareholder. So again, that's one thing to note, because if you are holding this, you're bag holding this, whatever, again, you need to be knowing when these things are bad for you as an investor. And again, these are bad things. And it's why these aren't ever stocks I hold long term. And I know I'm going to get a lot of hate for this. People think it's going to the moon again. If you got hate for it in the comments, I don't really care. Again, it's not going to be a stock I'm personally going to invest in, because again, there isn't any reason to. They don't have great fundamentals. Yes, there can be upside, but what's more likely to happen is they continue to do those reverse stock splits, and you just keep losing 90-95% of your investment every time they do another reverse stock split. So to me, it's not all that appealing, but what are key levels I would be paying attention to on MULN? So obviously we did talk about that $1 level. Now this is key because again, it is a key psychological level. This is also another key one, because if MULN starts to break below it, you will get it doing another, most likely another reverse stock split a month or two down the line. Reason for that is, again, that's to avoid their NASDAQ delisting, because they have to stay above $1. Most likely we will break below this level, but before we break below it, I wouldn't be surprised if we see a lot of buyers sitting around this $1 level. We get a quick kind of push off this level. You know, we could be looking for a 10-20 cent push, but you know, that is a 10-20% move. So definitely some opportunity I would be paying attention to. But overall, in time, I don't think that will be the bottom. I do think we will continue lower. And that's why, again, from a support side, it's not one I'm looking to buy at all. The main opportunity I see on MULN is if we start pushing to the upside. So if for any reason we do start pushing to the upside, and again, this could be for any reason, if it's just a short squeeze, which I don't think we'll be seeing, but if we did, that happens, or if there's just a big kind of hyper momentum, and we start pushing to the upside, again, these are the targets when I would start paying attention to. This is when I would be having my alerts out. So at 540 to around $7, this is our first deviations between the 6-month and the 1-year chart. 6-month on the left, 1 year on the right. Now, this is key, because this is, well, when you see standard deviation channels anyway, you should see 68% of the data trade between these golden lines. So really what that means is if we start breaking up to this level or above it, really we're most likely going to see a reversal happen, or at least a pullback. So this is really where my main opportunity comes, from 540 and above, looking at it short bias. Obviously, with stocks like this, I don't want to be holding the outright shares, because if it does skyrocket, obviously, you don't want to be kind of screwed on the side of you can't cover, or it goes up a few 100%, because again, that is always a possibility. We saw it on the GameStop, we saw it on the Bed Bath and Beyonds and stuff like that. So it's all about being managed. So I will be looking at it short bias coming into these levels, but if I am shorting the outright shares, I'm hedging with calls in the same quantity as I'm buying in the shares. And another solution is just buying credit or debit spreads. Or again, we can just be buying outright puts. And that's a really good thing on MULN, is there is a lot of options. They are somewhat liquid. So if we're trading it, again, there's a lot of protection that we can trade by using the options. Because again, shorting outright nakedly overnight is just extremely risky. So those would be the two, or kind of the first set of resistance I'd be paying attention to. If we can break up to there, looking at it short bias. If we do end up breaking through this level, we do have a next set of resistance at $9, $12.75, and obviously we do have levels going higher. And the only reason we have so many resistances is because it's such a strong downtrending stock. Deviations work is obviously it takes into account all the data in that time frame. So on the left we have a 6-month, on the right we have the 1 year. It takes in all that account, and then it kind of creates an average price. So between these golden deviations, again, 66% of data should trade within that range. If you go out to the blue, that's 95% of data. So you can start seeing when you break into these kind of areas, Again, it is not usually going to sustain, and that's why on something like Mullen, we don't really have any targets to the downside because it's been such a strong downtrending stock. So really we can only be paying attention to the resistances, and that's going to be from that 540 and above. So those would be the key short bias levels I'd be paying attention to. One other thing to note is obviously not only are their fundamentals not all that great, and I do get they are an innovation company, you expect them to grow in time, but it's also taking on that risk. If you're putting in a large sum of your money, and I always see it in the comments, people saying their bag holding or their averages $4 or $5 or something like that. If you're not going to be risk managed, you need to be willing to, what you put in the stock, be able to lose it, because yes, in the long term they may do something, but at least in the short term you need to be able to basically sustain that. So if you aren't going to have a stop loss, you need to be able to put into that stock everything you can lose. If you're putting $1,000 in there, you're willing to lose that $1,000. It doesn't kind of affect your livelihood if it goes against you, and that's really going to be the key thing with a stock like this. If you're holding it long term, you're going to be a bag holder. You're not going to have stops. Again, you have to be willing what you lose, what you put into it. But those are those key levels, and just to know, obviously, the fundamentals are downtrending. The deviations are also downtrending. Whenever I see something like this, I don't tend to go against the shorter and the longer term trend. So that means even if we did have supports on the deviations, I don't usually like to buy them because the probability of them working is going to be a lot less. Whereas if the short term, meaning the 6 month, the 1 year, the longer term trend are both downtrending, the fundamentals are pretty poor. If we do ever get pops, the likelihood of staying above these is just, from a deviation perspective, very low, but then also from a fundamental perspective, also relatively low. So that's why I quite like them, because again, a lot of factors are in your favor if you're trying to catch something like this short bias. So I hope you enjoyed my breakdown. Again, I know I'm going to get a lot of hate for these. You always do when you're talking about these meme stocks or these hype stocks and you're talking about them bearishly. But again, put your hate in the comments. I like to see your kind of reasoning for why it should really, 10x or 20x from where it is now. I think that would be quite informative because I never really see too many reasons for it. Usually it just says you're an idiot. But yeah, so I hope you enjoyed it. If you did, why not drop a like and subscribe if you want your own stock analysis? Throw that in the comments. And if you enjoyed the video, why not check out this analysis video?